Good morning all, hope you're doing okay. So May the 24th, 2022 Bulletin. We have quite a busy calendar today, and we've got Powell much later in 10 hours time. So that's going to be a big mover. I think he might be a bit dovish because the S&P and the Dow and Nasdaq, they're pretty much like in freefall mode. So he might say something to lift the markets a little bit, or say something that might indicate some kind of reversal scenario. He wants a softish landing, and it looks like we're going into a hard landing. So he might say something just to lighten the load, to alleviate the free fall. So that might be an interesting one. We might be risk on after the speech. So if we're like in declines going into the speech, then we'll probably rally. So watch what happens today. So potentially we're going to be risk off here, and then we're going to be risk on. So be very careful, and we'll cover. We've got FOMC tomorrow as well, so that's going to be massive. So potential scenario: risk off, then risk on, and then overnight we'll probably be risk off, and then we don't know what happens here. But what normally happens is that if we're leading up to a big risk event, sometimes the reversal happens, but we've got to be careful with the initial move as well. So eyes on that. I think I'm going to be trading after. I think that's probably the sensible thing to do, because there's going to be a lot of chop and roller coaster. So risk off at the big picture, risk off at the 24-hour change, but the movement is very subtle. It's a tiny move. The VIX was crushed. We might break the yearly pivot, which would be quite bullish. There's a risk off indication here on the 5 and the 10 year. We've got an inversion. What we should see is the yields track this trend line, but we've got the 10 year. It dumped quite a bit, and what we want is that to be a bit higher, and then the 5 year to be down a little bit. The fact that the 10 year is coming down will mean that the UJ might come down as well, because that tracks the 10 year very well. So there's a bit of an inversion here, so be careful. That's normally a risk off sign. And you can look at this. I just sent the this bulletin to the main channel, so you can zoom in on things if you wanted to. There's the yen strength here, and there's a lot of chop on H4, which would be understandable. And that yen strength re-emerging, it ties into Marco's weekly strength and weakness sheet, which you can see in the technical channel. And also he put out the recommendation to look at Swiss, because it made a big advance from last week. And there's the Swiss franc there. It's actually quite strong on the daily, and the dollar and the CAD are currently battling on the monthly, so be careful of the dollar CAD, and there's a big battle going on there for supremacy. There's a dollar CAD and dollar Swiss, so that's made a sell because the net long, and this is a short because they're shifting over time. Nothing really stands out as buy. No, not really. Looking at it, you want strong greens. There's nothing really strong green, but there are strong reds indicating sell. However, if we go risk off, which is possible scenario because we're priming up for a Powell speech, so we could be risk off up to the Powell speech, and then we can be risk on. So this is why we need to be careful and know your exits as well. So the dollar can strengthen, so we might see some dollar strength and then dollar weakness, and then dollar strength and dollar weakness. So it's quite choppy. S&P made a buy because they shorted it here, so an eye on 3,900. I think they're not conditioned enough to be fearful, and they're going to try and buy this dip. Let me have a look actually. Yeah, it's very sideways. Yeah, it looks like they might try and buy the dip. They are actually, from looking at this since, it's plateaued, so they're not shorting it, and it looks like because they're not shorting it, they might long. If they long, then we'll fall. So we might be going risk off, which is what I'm thinking that's going to happen. And there's the hexagon scenario where they buy the dip. If they buy it, we'll fall. And so that's that. It's about psychological conditioning. They need to be conditioned to be fearful, not be fearless. They need to be fearful. Gold's very undecided, which we saw on the signals channel. We had risk, we had the sell, then the buy, and then the buy and the sell, and it was just a lot of indecision on gold. And we will probably see it because we're at the 50% region, so we're going to see a lot of chop. And no doubt the big fish are looking at the gold sentiment as well. And if the retail guys are undecided, the big fish are probably not going to get too involved until they've shown their hand. And once the retail guys have shown their hand and they've gone one particular way, then price will do the opposite, and that's where the big fish will come in. And so that's that. CAD-Gen is our best bet, 80% probability, which is okay, but has a 20% margin of error. Kiwi yen is very weak, so don't look for Kiwi yen for US 500 strength. So yeah, might be something to do with some position on the New Zealand dollar potentially, because that is quite out of whack. So maybe some weakness on the Kiwi. And apologies if you can hear a bird in the background as well. It's a bit of a nuisance. So there's the risk off, which ties into our risk calculation, and the 5 and the 10-year yields had inverted, which I talked about. EA is making a buy if we use the strongest versus weakest. We strip out the yen, and that EA is a risk off indication because the Australian dollar is the riskier currency, and if it weakens against euro, it suggests risk off undertone. So it's just a good risk on, risk off proxy. And largest move was the Euro USD. We had some ECB comments about rate hikes, which it looks like it's going to go ahead, and so the retail guys shorted it on that statement. However, look at the Euro USD, it's green, green, green now. Gold is red, 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 and the dollar Swiss is red, red, red. There's a lot of mismatch, you can see. The largest stop loss cluster is the Euro Yen above. Before yesterday it was below, and now it's above. So because the liquidity is great above and below current price, it tells me that we're going to see a liquidation event for EJ, and banks are positioned for the Euro strength. If you see yesterday's COT video, the Euro FX really strengthened. So it looks like we might come up to take the stop loss cluster above at 136.80. And we'll have to wait and see what happens. So there's the bubbles, there's the euro, and there's the yen. So that'll be a euro yen buy. You see, ideally the yen would be over here, but the distance is okay. The euro USD or the euro CAD would be better because of the distance over time. See. So do check that COT video. It's really short, but I think it's about 3 minutes long. Signals were positive yesterday. We got 7 pips, which isn't like a fantastic amount, but it's not negative, and it's a trade setup I spotted based on the point of control. We'd fallen below the POC, and we sort of fell quite a bit, and then of course it rebounded, and it did continue a lot higher, and we strengthened. So it was a good job we got out where we did. Then, however, ironically, over Asia, the yen it strengthened. So it's almost like if we had like a massively wide stop, we would have done okay. But then there's that risk of being stopped out on a large stop. So it's quite naughty, because if we had like terrible risk management, we might have done okay and we would have been up a lot more. And that's quite naughty from how price action is, because it punishes you for thinking, oh, I wish I'd had a wider stop. But then that's, of course, if you have wide stops and you get stopped out, that's how you encounter large losses. So I think it's engineered in that way, where we're seeing it's like tempting us to have wide stops by having these fluctuations in price coming up and down, up and down. It's a massive chop. And so you think to yourself, oh, I wish I had a wider stop. And of course that's how you ruin your account, and that's how you do damage. So know your exit as well, and it's quite naughty really, trading most of the time. It always tries to tempt you and having terrible risk management, and sometimes it works out, and that's the killer. Yes, the outcome is very uncertain, especially with risk appetite. We're risk on, risk off, risk on, risk off, and it fluctuates all the time. And we're the worst 8 weeks in Dow performance in nearly 100 years, so the fact we're doing okay is a great sign. So there's that thing that I think is going to happen. We're going to be risk off all the way up to Powell, and then we're going to be risk on. Then we don't know what happens at Asia, and then we've got the FOMC tomorrow. So soft-ish landing underway possibly. So just trade carefully. Know what I was saying about this. Your risk management and things, and how price action tempts you to have bad risk management, and that's the killer as well. So I think that's what they want you to do. They want to wipe you out, and these big waves will crush you unless you know where your exit is. So trade carefully. I'll be back tomorrow for FOMC. If you're wondering why I sound more awake, is I actually had a good night's sleep for the first time in weeks. So that's great. I'll speak to you guys tomorrow morning for the Quasidb Bulletin.